Hello and welcome to another episode of Angel Insights, the show that goes deep into the world of early stage investing. I'm your host, Tom Britton, co-founder of SyndicateRoom, and today I'm delighted to welcome Eliot Brooks, co-founder and CEO of Cocoon, to the show. Eliot, it's a pleasure to have you here.
Great to be here. Yeah, I'm really looking forward to getting stuck into it.
Now, today's a very special episode for two reasons. First, we welcome Business Weekly to the show as media sponsor. Thank you very much to them for promoting and supporting the podcast these many years. And second, Cocoon is a portfolio company of Carbon 13. And for those of you that don't know, we are running an SEIS fund in partnership with Carbon 13, which you can find out more about on our website, www.syndicateroom.com. More on that later. And for now, without further ado, it's back to the show. Eliot, it's fantastic to have a Carbon 13 portfolio company on the show. And later on, we will come back to the program and what you went through when you were a part of it. But for now, while I know a little bit about the business, I was hoping you could tell me a bit more about your own background and how the company actually came to be.
Sure. Yeah. So my background's pretty varied. I started out my career in private equity, very quickly realized I wanted to be on the other side of the table and went and cut my teeth in a few fintech startups before founding a health diagnostics business in 2016 called Thriver. So grew that business over the last 7 years. And in 2022, decided I wanted to, for some reason, jump back into the world of scrappy startups and build something new again, but to do that in the climate space.
Before we talk about Carbon 13, so why the climate tech space? Like, why was it of importance to you to do something in that space?
So I think that, there's some core things that every human experiences, right? Their health, their finances, their environment, and, food, drink, and that, how that relates to the environment. And my previous business was focused on health, and that felt like a very meaningful mission and vision for the company at the time. And over those 7 years of working in that space, obviously the awareness, the um, urgency around climate really grew. And I no longer felt like I was working on the most important thing right now. And so the climate emergency really drew me in, and I wanted to do something, show up to work every day feeling like I was making a difference.
Did you know that you wanted to go through a program? I mean, or was it just a bit of luck that you found out about the Carbon 13 program?
Yeah, so I would have not thought about doing a program other than Carbon 13 for the very specific reason of I had built a business before. I felt like I've got a good amount of scaling experience. Like, we got to 140 people, raised around 15 million of capital. So I'd seen, that first period of time in terms of starting a business and what that requires, and didn't feel I necessarily would benefit that much from an accelerator. And when I went and started researching a lot about climate and how you have impact, it became very clear to me that the hard problems we face require hardware. And so at that point, I realized, well, I know nothing about hardware because my previous company was largely software focused. So I didn't know any mechanical engineers, any hardware developers. I didn't know scientists. And at that point, I came across Carbon 13, and that is exactly what they do. They bring together hardware, mechanical engineers, some software engineers, scientists, and commercial folks. And they, provide this great talent attraction of those people.
So Carbon 13 has a fairly unique approach. They recruit people as opposed to companies. And from my understanding, the first part of the program is just meeting the people, trying to find fit. Maybe some ideas are getting thrown around, but it's really who thinks they can work well together and have a rough idea of how it works.
Mhm.
How did you find that part of the experience?
Yeah, it's one of the more bizarre experiences I've had in my life where it's kind of like Love Island meets Dragon's Den or something. I don't know, but it would make for a fascinating documentary. But yeah, you're trying to meet all 80 of the amazing people on the cohort, figure out who you gel with, and it's quite an intense experience. Like takes a lot of time, a lot of conversations. But really, the way they curate it, it gives you the opportunity to figure out who you're aligned with in terms of your values, your skill sets, and your areas of interest. And so you're right in that it's not about necessarily really getting into ideas, but you do want to find people who have a similar passion for maybe a particular problem space. It's not for everyone that experience, but it is a great experience and it really pushes everyone out of their comfort zone. And I was fortunate enough to find two wonderful co-founders who aligned on vision, brought very complementary but completely different skill sets, and we aligned around a problem space.
And of course, we're going to come to that problem space. But talk to me a little bit about from that point onward. So you formed, you gelled with two co-founders, and you had this idea specifically around concrete, or was it kind of general? We want to tackle construction.
Yeah, it was a couple of different ideas, but the general premise was based on Will, my co-founder, research from his PhD at Cambridge. And that was around looking at different industrial waste streams and how you might find a way to valorize them. So a lot of his research looked at how you could capture CO2 into um, slag heaps that were already deposited and dumped from, the 100 years of steelmaking in the UK, or 200 years, and how those were naturally absorbing CO2 and how you might accelerate that. So that was kind of one idea and the premise, but eventually we kind of pivoted towards looking at, what future waste streams are going to grow as a consequence of the energy transition, and how can we do something of value with those that has a CO2 impact. And it just so happens that we landed on looking at these new byproducts from electric arc steelmaking, which is different to how we've historically made steel via the blast furnace. And when we looked at that byproduct, we kicked around some ideas of what we could do with it. Will worked his magic from a science perspective, looking at the chemistry, and that was really the genesis of what Cocoon is today, which is all around taking that growing waste stream or byproduct and upcycling it into what's called a supplementary cementitious material. So this is a material that can replace cement in the process of making or batching up concrete. And it doesn't entirely replace cement, hence the supplementary, but you can replace anywhere from 30 to 50% of cement that goes in the concrete with this byproduct. And because it's a byproduct, it kind of starts with zero embodied emissions. And then we have a very low energy intensive process to enable it to be used as a cementitious material. So it's far lower carbon, roughly 90% lower carbon per ton of material than cement.
That is incredible. So you're taking a waste stream on this side, you're processing it in a fairly clean manner, and then you're able to replace, did you say 30% of cement in the formation of concrete? Have I got that right?
Exactly. So if you think about concrete like you're baking a product almost, you put cement in at a ratio with water, aggregate, sand, and we can reduce the amount of cement that goes into that concrete by 30% is where we're at the moment, but we're trying to push that replacement rate up all the time so that we can reduce the amount of cement. And cement, for those that don't know, makes up around 90% of the emissions associated with concrete.
Did you say 90?
Yeah, 90.
Wow.
Yeah.
And in terms of concrete itself, what are the emissions? Because obviously we use a lot of concrete. What does that equate to on a global scale?
Yeah, so the concrete industry is roughly 7 to 8% of global greenhouse gas emissions. And then the steel industry is around 7%. So they're both two, behemoth contributors to greenhouse gas emissions. Concrete
Incredible.
is actually the second most consumed material in the world after water.
Wow, I didn't know that.
Yeah.
And obviously that's a lot of greenhouse gas. So how's it going so far? So you've been through this program and you've been building the business after the program. What are some of the milestones that you've achieved so far, and kind of what's on the horizon?
Yeah, so when Carbon 13 backed us, we had an idea and some initial results and data that suggested and supported the viability of what we were doing and the feasibility. And we then also took some funding from another hardware focused investor. And we set ourselves a target of getting to TRL 4. So TRL levels, for those that don't know, is kind of how you measure the progress of hardware, where 1 is an idea or an inkling, 2 is research, 3 is a very simple prototype, 4 is an expanded end-to-end prototype. So we set ourselves a goal of getting to TRL 4 and showing that the material had cementitious properties, mainly that being compressive strength, right? If the material doesn't have strength, then it's a no-go. So that is the kind of first critical test you have to show in that material's performance to know whether it's worth pursuing. So we took the carbon-13 money, I think roughly September. By December, we had our first data on compressive strength. We had built that end-to-end prototype. And from there, we kicked off the fundraising process in January and closed a pre-seed of around $5.5 million in May.
Your previous startup was very much a software-based business, so different scaling properties. How have you found that change to trying to build, expand, and scale this hardware company versus what you were doing in previous company?
Yeah, it's a lot harder in the sense that to get market traction is quite hard when you don't have a product that exists. So you have to think around the box, think out of the box, I should say, as to how you can demonstrate market traction for what you ultimately aim to produce and sell whilst you're developing it. So that looks like how you can carry out, short, snappy trials at the lab scale and use those results from those trials to start getting the interest of, in our case, we think of off-takers. So they're folks buying the cementitious material. So that could be cement manufacturers or concrete producers. But we also have to get the interest of the feedstock suppliers. So that's the steel slag, which comes from the steel plant. So, we came up with innovative way of doing a small proof of concept that gave results for both of those parties. So you can start getting that commercial traction. So that's one way, kind of trying to shortcut market feedback early on whilst you're developing the technology. One of the other challenges and learnings has been around, hardware takes time. Spending more time upfront planning always pays off. I think my software background meant like, let's just do it, try and see. And actually, that kind of sprint approach, release early, figure it out. You need more planning up front. So you need to really do a bit more research to inform you're building the right thing, because you don't want to build stuff that's expensive. It's time consuming. It's CapEx heavy. You want to spend the research to make sure it's as informed a build as can be. So there's a bit of balancing this pace with planning that you have to get right. And then the other big one is lead times. They're a killer. So you need to plan ahead because of those, and ordering spare parts, redundancies. Like we've had really silly things where we only had one part in the lab where we're doing all of our work. That part breaks. Suddenly you can't complete your testing. So it was specifically a jig for a crushing machine where we crush the products to test their strength. That jig broke, then we couldn't crush all of our cement cubes that we had made for a month because we were waiting for a part. So, order spare parts. It's these silly, painful things you learn along the way.
Yeah, a lot of learning in there. I have to ask, you've got so much competition that is probably focused just on cost, more than anything, and who can sell it the cheapest. Like what's your strategy for this differentiated product? How are you competing with those really established players?
Yeah, I think we're very much all as a globe, particularly with kind of changes in the last few years, waking up to the fact that we have to find ways for the climate transition to make economic sense. And our strategy, since we started, has always been the same. Produce a product that performs comparable to other products in the market that's priced comparatively to it. So we are not going out there fishing for green premiums. We are not trying to find innovative ways of generating offset credits. It's about just producing a product that performs similar to something in the market at a comparative price. And thankfully, process, a lot of the work going into the process we're developing, the hardware is around enabling us to achieve that.
Okay. A bit of a side question. You talked about it before, but you're taking the sludge. You're taking these from the steel mills and such. What are they getting out of it?
Yeah, so we give them a revenue share on the product. That's the plan. So we want to turn what is effectively a cost center into a profit center.
Okay, because they would be paying to dispose of it otherwise.
They're paying someone to handle it, in some cases dispose of it. In some cases, it does get used as a low value aggregate. So aggregate goes into the point of making concrete as well, but it provides no cementitious reactivity. It's a filler product, so it sells for like maybe $10 a ton. And the steel mill wouldn't get all of that. The person handling the waste would. So our model is to try and turn that effectively that cost center into a profit center through a revenue share mechanism, and us saving on the handling costs.
Fantastic. So it's kind of win-win for them, which is great.
Yeah.
I'm going to backtrack a little bit because you mentioned that you raised a decent sized round, a little over 5 million in your last round. And before that, you had probably taken a smaller amount with the Carbon 13 money. Did you notice that being quite different in the scale of the round that you had to raise next, because it's a hardware company versus software where you kind of, you can do a little bit more and then a little bit more. And then once you've really hit traction, then you do the big round. You've taken a pretty big round up front. How's that feeling?
Yeah, I think every hardware company ends up having to do that. And it's a big jump, and you're right. It's a consequence of being a hardware company. That said, we were oversubscribed, which was nice. So we overfunded a bit more than we planned to. I think we ended up raising an additional $1 million. But it gives you, hardware takes time, so it gives you buffer. So it's worth it. Take the bit extra dilution and give yourself some breathing room. Give yourself the ability to de-risk. It effectively can add on to your runway, or it can de-risk hitting your milestones because you have more avenues to pursue, or you can go in a few different directions. You can have kind of backup plans. So it's helpful as a hardware company.
Assuming it all goes to plan, though, or close to plan, what are the key milestones that round is allowing you to achieve?
Yeah, so the essence really is taking the technology out of the lab and getting it into the real world. What that means is we are currently in the process of carrying out some trials at the kind of hundreds of kilograms scale at the Material Processing Institute in the north of the UK, which is effectively a research and development steel plant. So it's a great place to trial this technology whilst we're still developing, improving, tinkering with it. And then from there, we're looking to take that on site to a steel plant. We have an agreement with a manufacturer in the US where we'll run that on site to generate more like the tons scale. And that amount of material can then go to off-takers, so cement manufacturers and concrete producers, to carry out their evaluations, carrying out concrete tests, putting it into different structures and understanding how it performs. And we're doing all of that critically to line up a pilot plant location. So where we will deploy something of even greater scale, producing, hundreds, if not 1,000 tons a month. And once we have that location lined up and the off-takers, so the buyers from that plant, that's when we're going to look to try and start the fundraising process.
And the next round then becomes commercialization on thousands and thousands. I mean, how much, it sounds, these numbers are going to be crazy, but how much concrete is produced a month?
Globally?
Yeah, or let's talk about the UK. If we just look at the UK market, like, what are we talking about in terms of consumption of, or potential consumption of your product?
So if you speak to the major cement manufacturers, they're not interested in a solution unless there's a clear path to 100,000 tons a year.
Okay.
So,
and that's just one.
That's one plant. Yeah. And one plant will produce, anywhere from 1 million to 3, 4, maybe 5 million tons of cement a year.
Okay.
I don't know the number of cement plants off the top of my head in the US
But there's a
or the
lot.
UK. There's a lot. Yeah, there's a huge amount of cement produced each year. I should probably know this figure. Uh,
It's all right.
but so you're kind of taking, if you think about cement production at a country geography scale, and then you're saying, well, we want to replace a third of that. That gives you your kind of max demand.
Mm.
Um, and I think what's unique about what we're doing versus, maybe some other solutions is this material is already produced. Over 200 million tons of steel slag is produced every year. So we're not scaling up mining of a novel material. We're taking something that's already produced, largely underutilized, and just putting it through a process to turn it on and enable it to feed into the concrete industry. And so, as I say, when you speak to cement manufacturers, a lot of the solutions that they are looking at, they struggle to understand how they can get to that 100,000 tons a year scale. Whereas we're fortunate, we don't have that problem. Your average steel plant will maybe produce 100 to 300,000 tons.
Wow, that's incredible. And if you look at, okay, let's just say you do 100,000 a year, like roughly what type of carbon savings does that put you at?
Yeah, so the it's not quite. I'm going to do it for simplicity's sake, but for every ton of cement you negate the need for, you save roughly a ton of CO2. It's ever so slightly under one. So 1 ton equates to 1 ton of CO2 saved.
Wow.
Ever so slightly under.
So one contract where you're doing that 100,000 for that one producer is 100,000 tons of CO2 saved.
Yeah, roughly. Yeah, probably like between 90 to 100.
Wow. And if I put a monetary value on that, like what does 100,000 tons of concrete?
Depends quite massively on geography. So 100,000 tons of comparable SEM that exists in the market today might sell in the Nordics. It can be 160 euros a ton. In the UK, it's around £100 a ton. In the US, it's around $100. In the Middle East, it's around $60 a ton. So it varies quite a bit geographically, but that steel slag currently is either being landfilled or it's being sold for about 10, maybe 5, maybe $15 a ton. So we're talking about 5 to 10xing the value of that byproduct.
And your margin on that, because you're going to pay them for it, so it's not a cost. You sell it, let's say it's 100, it's in the US, you're giving them 15, and then the rest of that, from the process wise, what is the cost of producing that ton?
Not sure I want to reveal too much, but we've done a lot of economic analysis to make sure this pans out. I think you've got to do that if you're building a hardware solution. You would be foolish to commit blood, sweat, tears, years to building a company unless you knew that at commercial scale it can generate. Theoretically should. Yeah. So I won't reveal exact numbers.
No, that's fine.
We have some confidence that we can make it work for everyone, that the steel plant can be happy, that anyone who's managing the slag or the waste can be happy, that the cement manufacturer can be happy, and we can be happy.
So we've got carbon reduction, repurposing of waste, profit. 3 key things, which is most companies can't say that they do that. So you've talked about the next trials, and you're trying to find that first customer. Have you got a client already kind of on the hook for, hey, if you can make it work, we'll give it a go?
Yeah, we're looking at we've got a few options there, and that kind of trying to push forward on as many fronts as you can, because until something's signed and built, it's not done. So yeah, we have some really good options. We're in a good place with the pipeline, which is good.
Very cool. And just tying it back to Carbon 13 for a second, obviously you went through the program and did all of that, but are you still in touch with the mentors and the others that you met on the program, and kind of what has been the ongoing relationship with them and support that you've got from them since, I don't want to call it graduating, but completing the program.
Yeah, so when we did the fundraise, the actual Carbon 13 team were particularly helpful in terms of making introductions to other investors and supporting us there, reviewing the deck, providing feedback. Then obviously from a cohort perspective, you do form good bonds with people in the cohort, and there's a big WhatsApp group we have with everyone in where people are sharing jobs, opportunities, asking for intros. So that remains pretty active and very supportive. And on the mentor side, actually, one of our mentors who was introduced to us is now an advisor, formerly paid compensated advisor for the company. So that gives you a bit of an idea of the strength of the advisors they have. So Mike Ebelin, who's got years as a CEO for various cement manufacturers, has now been advising us for over a year formally. So yeah, it's
Very cool.
kind of all boxes ticked on that front.
Excellent. Two questions. 5 years from now, you're looking back. What does success look like?
Yeah. So it's about millions of tons of CO2 avoided. Obviously, any company that goes through Carbon 13 has to show that they can get to 10 million tons of CO2 avoided within 10 years. If we could do that in 5, amazing. Requires a lot of rollouts. We'll be busy, but it's not implausible. But yeah, kind of having a material millions-ish tons of CO2 avoided, so a million plus tons of material that we've processed effectively, that would be a really great milestone for us all. I think there's another piece around feeling proud with the speed with which we've moved at, because the Carbon 13 talk about the climate emergency. I've talked about it. Like, we need solutions now, and a lot of those solutions require hardware. And we talked about how hardware is slow. And I think we really, at Cocoon, want to be the fastest moving hardware business out there. So if we can say in 5 years, wow, we really did motor, I'd be really proud.
That's great. And for anybody who wants to find out more about what you're doing and follow the journey, where should they go?
Yeah, check out cocooncarbon.com. Follow me on LinkedIn, follow the company on LinkedIn. We'll have more content coming out soon. We're just in the process of trying to figure out, we should do more proactive marketing. So more information coming soon. But check the website, check LinkedIn, and maybe some other channels, because there's some pretty cool, interesting stuff that happens in the lab that we need to start showcasing more of.
Very cool. Well, I will be subscribing when you've got
Awesome.
that all out. It's been a pleasure, honestly, getting to know a bit more about the business and your journey so far. And I wish you all the success on it. And maybe we can do this again in 12 months' time and see how those milestones are coming along. So thank you very much for joining today.
Awesome. Thank you for having me. And yeah, we should do that.
Well, that concludes this week's episode of Angel Insights. We hope you enjoyed it, and we hope you tune in for the next one. For those that wanted to find out more about Cocoon, please do head to their website. And for those who are interested in our Carbon 13 SEIS fund, please do check it out on www.syndicateroom.com. And I'll hopefully see you next time. Bye.